Hi, it's Eric with the HI EMIM Africa Fund, giving you the update for November. It was a difficult month. The fund was down about 6%. We lost some money in our African gold miners, but we also lost money on the short book. As you know, a lot of things came together during November to create a real surge in optimism about the outlook for the economy. And those stocks with the worst fundamentals moved the most. And for us, that was our shorts in the South African banks and property sector, where things are very difficult currently. We also lost a bit on our Egyptian treasury bills. There was some appreciation of the euro versus the Egyptian pound. During the end of the month, we reduced our short book to about 3.7% of AUM, and we decided just to focus on our long book, where we think there's considerable upside. Our top positions are Naspers, MTN, JSE, and the African gold and platinum miners. So why are we excited about African gold and platinum miners, and why do we think this is the most exciting sector? Well, in Africa, like the rest of the world, there's a tremendous amount of optimism about the outlook for the economy, despite conditions being very difficult. There's a real desire to take above average levels of risk and pay very high valuations, and a disdain for anything that's considered a safe haven, such as US treasuries or gold. In a recent survey by the Bank of America, they did a survey on what's investors' favorite asset class for 2021, and gold was the least favorite, with only 5% of investors thinking it could outperform next year. In my experience, when everyone's that convinced that something's not going to do well, it has a real chance to surprise on the upside. But more than just being contrarian, I think there's a fundamental reason gold's really going to do well. Everyone's excited about QE and how it's going to be great for the economy, but actually the more we do QE, the more growth is going to disappoint. If you think about standard macroeconomics and the formula for growth, a very standard growth formula is the solo growth model. And in this model, if a country wants to grow, they should save and invest in technology and education. Those savings and investment in education improve returns on capital and labor, and it creates growth. It's a slow process and it takes decades, but it can be very powerful. The opposite of that would be QE, which is just to try and lower interest rates and create a short-term burst in demand and create a wealth effect. This is a short-term fix that we just keep doing over and over again. But the more we do QE, and it's been 12 years now, we find that growth disappoints and debt continues to grow faster than income. Now, I think we all agree that policymakers are stuck in this loop. They're just going to keep doing more QE and bigger budget deficits. But I think for investors, the beneficiary of trying to devalue the currency, which is what this is going to shift from stocks and bonds to precious metals. And this is why I think the move in gold could be very big going forward. And that's why we're sticking with our African gold miners. So I think the upside could be tremendous. One other final sector that is kind of interesting is Egyptian equities. They've really underperformed this year. They're trading at about under 9 times earnings, with probably 15% earnings growth next year. So that's one other sector where we're doing work and could find some interesting opportunities. So it's been a very difficult month. Hopefully we can make some back in December, but I think we're just trying to be patient because I think this gold bull market's really starting to go now and is going to be a surprise for everybody. And I think there's going to be a lot of upside in the miners especially. Thank you very much.